Gold just dropped $90, but the selling may already be over. Why tonight's PCE print could trap the bears. Gold just got smashed. $90 off. Yesterday's high, support after support gave way, and within hours, price was sitting at $4,634, staring straight at yesterday's low. The chart looked broken, and then it turned. Buyers stepped in. The selling stopped. In a very short window, gold recovered more than $20. On any other day, that's just an intraday bounce. Nothing to get excited about. But today is not any other day, because this reversal is happening hours before PCE inflation, and I think the market may be setting up for something much bigger than a bounce tonight. Another run at $4,700. Here's the part most people are missing. Gold doesn't need a weak PCE number to make that happen. It may only need PCE to not be hot enough to give the bears what they need, because a lot of the selling may have already happened. Yesterday tells you everything. Gold came within dollars of $4,700, tagged $4,696 and change, and then got hit hard. The market dropped almost $90 from that peak. For the first time after this enormous rally, it looked like the deeper correction had finally arrived. Except one thing didn't happen. $4 buyers showed up before that level gave way, and gold recovered. Gold opened near the upper $4,600s and got sold hard throughout the session, all the way down to $4,634. Technically, this was exactly where the bears should have taken control. Gold had already printed a lower high. Momentum was pointing down. The next obvious target was yesterday's low, followed by $4,600. But sellers couldn't get it there, and that changes the entire setup heading into PCE. Everyone is waiting for PCE to tell them whether to buy or sell gold. But markets don't always wait for the data. Sometimes they position before it. Gold has already fallen almost $90 from yesterday's peak. Then it was sold again today. Profit has been taken. Weak longs have been shaken out, and when gold broke support this morning, fresh short sellers almost certainly entered the market as well. So, ask yourself a different question. What happens if PCE isn't actually bad enough for gold? It doesn't need to be spectacularly soft. It may only need to avoid delivering a serious inflation shock, because if PCE doesn't push Treasury yields and the dollar sharply higher, the bears suddenly have a problem. They've sold gold after a major correction, but they may not get the catalyst they need to push it through $4,600. And if gold starts moving higher instead, those new short positions begin coming under pressure. That's when tonight could get very interesting, very fast. Here's why the second move could be faster than the first. Imagine gold starts recovering after PC. First, existing buyers return. Then momentum traders see the reversal and jump in. But there's another source of demand that most people aren't accounting for. The people who sold this morning, if they're forced to exit, their exits become buy orders. That's short covering, and that's how an ordinary rebound accelerates into something much bigger. That's why I'm watching the mid $4,600s so closely. If gold decisively reclaims that area after PCE, today's sell-off starts being erased. Then today's earlier high becomes much more important. Break that, and the bearish structure we've been watching all morning is gone. At that point, we're no longer talking about defending $4,600. We're talking about retesting $4,700. And remember, gold already reached $4,696 yesterday. It doesn't need to travel hundreds of dollars to get there. The market has already shown that it can trade at those prices. It just needs another catalyst to challenge them. Now, I'm making a directional call here. My base case is higher after PC, but there's a very clear point where that view needs to be If PCE comes in materially hotter than expected, Treasury yields jump, the dollar strengthens, and gold loses today's rebound, then the bullish setup fails. The first warning would be a move back through $4,634. If sellers then attack yesterday's low and finally break through the $4,600 area, we're looking at a very different market. That would suggest today's recovery was only temporary, and the deeper correction may finally be underway. So, forget the question everyone was asking during this morning's sell-off. How far can gold fall? Here's the question that matters now. What if the sell-off has already happened? What if $4,634 was the final shakeout before PCE? Because if inflation doesn't revive the rate scare, Treasury yields stay contained, and gold starts reclaiming today's losses. The people who sold the breakdown could suddenly find themselves on the wrong side of the move. And then this rebound has two engines: fresh buy-in and short covering. That's the setup. I'm watching. My base case tonight is clear. Gold moves higher after PCE, reclaim today's high, and attention shifts straight back toward yesterday's peak. Then $4,700 is back in play. But if $4,634 breaks and $4,600 finally gives way, the call is wrong. Then the deeper correction becomes the story. Tonight, PCE could decide which side gets squeezed first. We'll be watching Treasury yields, the dollar, and whether gold can make another run at $4,700. Subscribe to Grand Markets for the next update. This content is for market analysis and educational purposes only and does not constitute financial advice.